Bitcoin under $20,000. Do these 5 things now. The cryptocurrency market has been on edge since November 2021, as Bitcoin has come crashing down from its all-time high of $69,000. The largest cryptocurrency in the world, Bitcoin, is now trading under $20,000 after touching lows of $17,592, breaking the $20,000 barrier for the first time since December 2020. Many of our favorite cryptocurrencies might have come down to lows that we never imagined. Today we bring you a few hacks that could be very helpful in the current market conditions. But before we look at those hacks, it is important to understand what prompted this crash and the current state in the market. In the most recent collapse of the cryptocurrency market, it has lost about 70% of its value this year and 37% only this month. Its decline came after issues at numerous important participants in the sector. As additional cryptocurrency investors are compelled to sell their holdings to meet margin calls and cover losses, further dips might have a domino effect. Along with the slump in cryptocurrency markets, US stocks experienced their worst weekly percentage decline in 2 years due to worries about rising interest rates and the increasing risk of a recession. The movements of Bitcoin have a tendency to resemble other risky assets, like tech stocks. From a peak of $2.9 trillion in November 2021, the total market capitalization of cryptocurrencies has fallen to around $875 billion. Stablecoin prices dropping indicates that investors may be withholding funds from the industry. The current state of the cryptocurrency market is one of extreme fear, along with recent global economic uncertainty. Events like the collapse of the Terra blockchain ecosystem and its Terra USD stablecoin and Luna tokens contributed to the mix. Investors in cryptocurrencies are understandably concerned about what to do next, as the bloodbath appears destined to go on. Now let's look at what we can do to still make money in the current market. Number 1. Invest in the biggest cryptocurrencies. If you are someone who wants to trade, the safest bet right now is to invest in Bitcoin. Due to the recent steep decline in the market value of Bitcoin, which has put many investors on edge, selling pressure is expected to become even more intense, which could result in altcoins getting crushed even more. However, when compared to other cryptocurrencies, Bitcoin appears to be a safe investment in the long run, as the conversion of big investors' little assets to Bitcoin may help it to recover quickly as compared to other cryptocurrencies. There is always a possibility of markets declining even further, given the current debate around Celsius becoming another Terra. Additionally, before stopping withdrawals, Celsius sent its assets to the FTX market. If these assets are thrown onto the market, analysts are expecting more losses, so be very careful and only invest money you can afford to lose. Number 2. DCA dollar cost average. If you are someone who wants to invest in cryptocurrencies for a few years, then the best thing you can do is start DCA right now. Many investors agree that using a dollar cost averaging technique is the best course of action given the fact that the crypto market is very unpredictable, even when things are going well. Using DCA has proven to be very successful in the past during the worst bear markets. As it is known, DCA is a long-term strategy that expects the long-term upward trend of cryptocurrency prices. It entails continuously accumulating little quantities of cryptocurrency, regardless of price. Instead of trying to predict the market bottom and acquire a significant quantity all at once, an investor may buy $50 worth of cryptocurrency each week, regardless of its price. DCA has so far demonstrated its value in cryptocurrency trading. As Bitcoin is almost down by 80% since November 2021, starting DCA now at certain support levels could be a good idea. Number 3. Staking. Staking is one of the tactics you can use for surviving the crypto winter. With staking, the number of tokens held remains constant, and staking offers an opportunity to acquire many more, even when your portfolio may be losing hundreds of dollars in value. By locking up your assets in a proof-of-stake blockchain for a defined amount of time, staking enables investors to earn a passive income. Keep in mind that staking expands the number of tokens you have in your wallet. While they might not be worth much right now, if altcoins begin to experience their typical 100% plus gains, their dollar value may increase by the time we reach the next bull run. Furthermore, staking also limits the opportunity to sell when an asset loses a substantial percentage of value, which is one of the main things that helps you to not lose your money. Number 4. Use trusted platforms. The best tack right now in current market conditions is to only use trusted platforms. Turning to reputable platforms will not only guarantee the security of your funds, but also present more stable chances amid the broader market instability and strife. Long-time Bitcoin holders are aware of the value of security, particularly while holding money on centralized and custodial cryptocurrency exchanges. As numerous cryptocurrency exchanges have shut down in the past due to bear markets, with well-known victims including Mt. Gox, Quadriga CX, and Cryptopia all lost their investor holdings in the process. It makes sense for traders who wish to maintain buying and selling during the bear market to rely on reputable exchanges like Binance and Coinbase, which have a long history of protecting their customers' assets. The platforms of the largest exchanges in the industry are also periodically audited to ensure that users can rely on them. Number 5. Stick to your strategy. There are always people calling on social media to buy the dip whenever Bitcoin is going down. This makes sense when we are in a bull market. But when we are dealing with a crypto winter, you probably should not go all in, as that could get you stuck and make you lose a lot of money. That is because in bear markets, there is always a chance of prices dropping even further. For instance, if you had purchased Bitcoin on the drop in January when it was nearly a third below its November peak, you would still be facing big losses today. These market conditions clearly show that many projects, even big ones, won't make it through a recovery or even a correction. As a result, the wait-and-see strategy, which carries no risk and preserves available capital for better times, is the wisest course of action. As explained earlier, you can always start doing dollar cost averaging, as that minimizes the risk of your losses. However, it is very important that you never invest all of your capital in one trade and only invest the money that you can afford to lose. That is it from today's video. Make sure to smash the like button and subscribe for future videos. Disclaimer: this is not financial advice, and the video is for educational purposes only. Always make your own research before investing in cryptocurrencies.